It's fine. Okay, let's see what you did with the MG actually. You took that reversal, right? Wow, this is clean actually. I like this entry here. Didn't work out unfortunately, but this is nice. This is good as well. Let's see. Oh, so you got this one. You see, guys? This one was good, but this one failed. We just said that. But this one, after a failed breakdown, is even better. You didn't even get stabbed right there. Were you watching it around here, Peter? I'm interested. Why didn't you take it to the long side there? If you were. I noticed that those type of trades, they work out usually after the first attempt. Like trying here, failing, then it's working out. But I wouldn't always wait for them to fail before I take them, because sometimes they also work out immediately. So it's really interesting how he got the right moment in this one. Alright guys, so we'll start with your trades, a couple of trades or so, and then I will go through all my trades. I know I shared with you my Apple and GME trades, which were amazing. I didn't share my losers in the chat room. I'll share them with you here in the trade review after we're done with this. Hey, Tanya. So let's see what you did there. Question: how do you determine whether it is a reverse ABCD type B or a descending triangle? Okay, that's interesting. First of all, remember, ascending triangles, descending triangles, they are breakout patterns. Breakout, right? And most probably, or most of the times, you want to take those with the direction of the bigger time frames, with the direction of the 15-minute chart, direction of the 60-minute chart, maybe even the direction of the 5-minute chart. If the stock is breaking out, pulling back, and it's sitting up for a continuation, I wouldn't consider this one right here. I mean, let's say consolidate right there. It's breaking out, it's pulling back, it's retesting right now. I wouldn't say this is a descending triangle to go down. I would think of it as a continuation pattern to the long side. Remember, you don't trade patterns alone. You don't trade it to the short side only because it looks like a descending triangle. And you don't trade it to the long side only because it looks like an ABCD pattern. You need to combine it with the price action and with the bigger time frame. So look at this. What do you have in the pre-market there? A level. Almost exactly to the wick, right? After the breakout, there is a pullback. It looks to you like it's descending right there, although it's not. And in fact, it was forming an ABCD pattern to the long side right there. I hope that was clear. Now, let's take a look at what you did right there. You traded this thing to the long side first. It was a long, right? And was this today? No, this was yesterday. Okay, this is not bad. For some reason, I can't zoom in. Okay, I can zoom in. So let's go for the bigger time frames. 60-minute chart. What do you have in the 60-minute chart? The 60-minute chart is more weak than strong. I see that there is a flat support down there. It did break it in the pre-market. It did a retest in the pre-market for a continuation, and it was sitting down for a short. The waves on the 5-minute chart were going up to forming a pennant right there. Could have been to the long side, could have been to the short side. I would have been more short biased than long biased looking at this price action. What's happening there is this thing breaking up on the 1-minute chart above this range. B-time took it to the long side, get stopped out, shakeout candle. Look at the increasing volume on this one. After breaking the low of the day, getting bought back up. This definitely should give you some confidence that this thing could actually break up rather than breaking down. And remember how we said the candles are being traded? If you look at this candle, for now, it's this new 16 candle is sitting within a range of this candle. So it could go at least a little bit to the upside, not without making a new high and then squeezing back down, going to the original direction. Or it could just immediately go down and break it down. Anyway, there was a potential for it to go up, where beta took it to the long side. Partial, and I like the partial. This was smart partial, just in case it doesn't make a new high and then squeezes back down, and then partial all the way up. I see you didn't add for an ABCD pattern because you thought that this is a descending triangle, and you went to the short side, when in fact it wouldn't have been a bad add or a bad entry to the long side. Geo, let's see what you did there. FUBO daily gap up at all-time high, because this is interesting. So the stock gaps up to all-time high, 2 consecutive 5-minute highs in an uptrend, 1 to a higher high and higher lows in an uptrend. Actually, we'll need to discuss this in a second. First, new 5-minute low against the uptrend, which is here. Oh my god, this is big actually. Another potential entry, these 2-minute bounce. Where is it? Where is it? Where is it? I guess around here. Does it matter when the stock gaps up and is at all-time high, failed to break pre-market high and of it? So first of all, look at the original direction. What's the original direction right here? This right here is weak. It's breaking the range to the downside. And looking at this, I'm definitely a little bit more short biased rather than long biased. After that, it squeezes up above view up and above all those moving averages into the middle of the range. And yes, around here, I will be more interested in a long rather than being interested in a short, because we broke the low of the range. If there was a range, actually, let's take a look first at the 16-minute chart and the daily chart, because we don't have those, and we need to implement those when we are reading the price action. Let's take a quick look at FUBO. So look, the 60-minute chart on this thing is flat. Unfortunately, I think that's one of the reasons I didn't trade it. Looking at this, I would draw these levels here, and I would draw these levels from the pre-market as well. So it's not that clean, and I'm not really long bias on it, because look at this. Weak to the downside, weak to the downside, weak to the downside. It's, for some reason, getting sold back down or pushed back down. And I will not be so interested in taking it to the short side for the reason Gio said. It gapped up to all-time highs, so it could drop a little bit down before squeezing back up. I will definitely be a little bit more long bias rather than short bias, but those wicks in the pre-market are not supporting me. Now, looking at the 5-minute chart, this wasn't a breakdown. This was still it being in a range, and even this was still it being in a range. So I wouldn't really have like to trade it anywhere right there. The third reason, you are buying it to the long side on the way down after a shooting star. Remember the rule on the ABCD pattern? You don't want to take an ABCD pattern to the long side against shooting star. This right here would have been the main reason for me not to take it to the long side. And I wouldn't really call it an ABCD pattern because there is no trend established. If you want to take an ABCD pattern or you want to trade it for a continuation, you need to see an uptrend on a bigger time frame or potential uptrend on the bigger time frame, which is the 60-minute chart. The 60-minute chart in this at this time was like this. And then you're taking it to this candle for an ABCD pattern in a smaller time frame. This is not the ideal ABCD pattern. Even this, I wouldn't have taken it. Why is that? It's just dropping down right now. The only place where you could have taken it to the long side at least would have been around here, because at this stage, it started making higher lows and higher highs. And you take it to the long side here, you could take partial at the breakout high of the day, and then again it's starting to just make lower lows and lower highs. Does this make sense to you? Okay, give me a second, guys. Okay, good. Let's take a look at Wiles trade. While traded PLTR PLTR on the daily chart, I like it. This is not a bad daily chart, actually. It's not ideal because we are still sitting below this and this right there, but I like it because of this. We are having kind of a range, and I love when I see that. If it breaks up, we'll have room at least all the way here. And this is not small move, by the way. This is around $2 move. If we can manage to make those $2 move, I would be totally happy about it. I like this daily chart on PLTR. 60-minute chart on PLTR, there is a range like that. What don't we like here? We just mentioned it in the previous trade. Anyone? What's not ideal about this range here? Maybe while you could tell. Yeah, exactly, John. If you have 1 week, it's totally fine. If you are having 2 weeks, it's not ideal. We don't like it so much, right? Now, let's go for the next thing right there. What's not ideal about this entry? Combine it with the 60-minute chart. What could have this been? Pay attention to this, and it happened here. Oh my God, this is so big actually. It happened around here. Fake breakout? Not exactly. It's something else. So this is a breakout, and this is retest. Retest, perfect. Reverse ABCD is also good. Reverse ABCD also works. M shape could work, but exactly, just to be really precise about it, this is a retest. So you will see that there is a range here. Stock is breaking the range. After the break of the range, we're definitely only short bias. If stock breaks to one of the two directions, it's only to be short bias, right? If it breaks, we're only short bias. You enter, but you enter to the long side, right? Remember the break to the downside. So what could we expect after the breakdown? After the breakdown, we could expect a retest and a continuation. So after this, you need to wait for this to the short side, not to the long side. When can you take it to the long side? You definitely can take it to the long side, but you can take it to the long side only if it goes above the middle of the range and then gives you a setup to enter. Not only goes into the middle of the range, we want to also see it giving us a setup after going to the middle of the range. When it goes to the middle of the range, we are starting to be interested in taking it to the long side. We don't take it immediately to the long side. See, and this would have been an amazing shot actually. It sold all the way to the previous resistance area. And then this one. I'm not sure if it reached it, but this was a good drop right there. Okay, that's good. Bobby, let's see what you did. So Bobby traded VLDR. Now, I guess Bobby wanted to trade. I did it. Okay, I see that. Yeah. Drawing levels on the 60-minute chart could also be useful, actually. Also, yeah. Now, Bobby traded VLDR, and I guess this trade here was attempted to be a parabolic reversal. But let's just look at this. Does this look parabolic? Remember this. Every time when you want to take it for a parabolic reversal, draw this line. Always draw this line. And say, is it looking parabolic or not? Parabolic will look like this, or at least like this. This is not parabolic. And this, definitely not parabolic. This is the first thing, right? The next thing, look at this. I just want you to see this. There is a range around here. I could draw multiple ranges, actually. There will be a major range, which is here. And there is a mini range, which gives you the entry there. If you could establish your position, take to the long side around here at the break of the first range, having your stop loss in the middle of the range, then add to your position at the break of this range, moving your stop loss to the middle of the range. Now, after the breakout, what could happen? After the breakout, a retest could happen, and there is. This is kind of a retest right there. Small, but it's a retest exactly to the penny, to the previous resistance. And this is not parabolic. It just broke out right now. You don't want to take these parabolic reversals, and I will update this webinar because this something was not mentioned before, and it's just new information. You don't want to take those immediately after breakouts, because after breakouts, what people are looking for is continuation. People are looking for continuation, a retest, pullback, sort of an ABCD pattern to take it to the long side. Now, this stock also is not so extended from the 9 and the 5. I know there is some room between your entry and the 9 and the 5. But this doesn't mean that the stock will literally touch the 9 and the 5, bounce out of it, and then continue the uptrend. Moving the 9 EMA is a moving average, and the stock could simply just go closer to it and then continue going higher. After the breakout, if the stock makes a huge move to the upper side, 3, 4, 5 candles, you could be interested in taking it to the short side because you know that now the closest resistance after the breakout is somewhere down there, and it has potential to go to the 9 and the 5. But immediately after the breakout, you don't want to force it. Just give it a little bit more room. Like here, for example. And right there, it's starting to get parabolic. Like right here, you see it's going like that. And right here, it's starting to get that force to the upper side, but still not so parabolic. It's only one big candle right there. Hope that made sense. Sam, let's see what you did. So Sam traded plug. And this is good. Same thing. You see, gap up. I think this is all-time high. Is this all-time high? Anyone correct me if I'm wrong? Okay, it's all-time high. That's good. Once we see a stock at all-time high, I'm definitely more long bias rather than short bias on it. And even if it starts dropping down, I will wait for it to touch the previous day close and catch an extreme reversal on it. Those are amazing for extreme reversals, and those are amazing for continuation. They're at all-time high, and at all-time high, stock could make a move bigger than the average true range. So you could hold into it, and you could add into positions more than on a normal day. On the 60-minute chart, there is a clear range right there. I loved. How didn't I watch plug today? Why didn't I don't know. I wasn't watching plug, unfortunately, but yeah, this was so clean. There is a clear tight range. This is the favorite range right there. What's happening in the pre-market, it broke out. I see the breakout happened in the pre-market. So establishing a position around here would have been good. Now, after the breakout, there is a retest. It's not exactly a retest. It's more uglier than the retest. It's dropping down into the middle of the range. When it goes into the middle of the range, you are no longer interested in a long. We're interested in a short. But will I look at it for a short at all-time high? Not really. And did it give us a setup to take it to the short side after it went to the middle of the range? Also, not really. Then it's getting back up, breaking the high one more time, making an ABCD pattern on the 1-minute chart, which is supporting the 60-minute chart. Sam took it to the long side and rode it all the way to the high of the day, 36 something. That was ideal. I love that. I love the patience. Now, where could you have added into this setup? You could have added here. Why is that? There is a selling pressure week. There is selling pressure week. There is sort of an ABCD pattern bouncing off a moving average. You don't want to add the low before the weeks. So here, you don't want to add it below the weeks. Once it's breaking, you could have added into your position. So this would have been a good spot to add. Yeah, if it opened and it immediately broke out, I wouldn't have traded it because the breakout happened in the pre-market. So it was already at this stage in the pre-market, and I wouldn't have taken it for a continuation. But looking at it sold off first, this made it an ideal setup. Immediately going up, I would definitely not traded it. You're right, Samir. Lydia, did you trade it too? Let's see Peter. So Peter is asking us, tell me what you see wrong in these two trades. I see errors. Let's see if we see the same thing. Okay, PLTR. Let's take a look at that. So let's start with the daily. The daily chart, we said it's good. It's good both for a long and a short because it's sitting in a range, but definitely I'd be more long biased and I would go for a breakout on this one. Let's take a look at the 15-minute chart. 15-minute chart is just dropping down. Not definitely interested in a long. 5-minute chart. So 5-minute chart, I see you took it for a reversal. This was a reversal, right? Both of them, Peter? Okay. So the first thing which I don't like about this is that it made only 2 candles. I don't take parabolic reversals or those reversals on the second consecutive candle. I want it to be at least on the 3rd candle. And the 3rd candle after it makes a new 5-minute low. The second thing, I'm not sure if this is the 9 on the 5-minute chart or not, but it looks close enough for me to the 9 on the 5. The 1-minute chart, I don't like the wick. Right here, I don't take those reversals against these type of wicks. If that was hammer, I'd have liked it more. Against this, now it started to form sort of a reverse ABCD pattern. For the breakdown, there is a breakdown pattern. right here. I definitely wouldn't have tried it right there. The 2-minute chart, it doesn't look good, it doesn't look bad, but definitely not so good after an engulfing on a new high within the candle, because we know how the candles are being traded. It could go all the way up, not make a new high, and then squeeze back down. Those would have been the main reason for me not to take it. Not the main reasons, actually. The main reason would have been this candle for me not to take it, and these 2 5-minute candles right there. What were your reasons? Going against the previous day close? And no volume. So again, no climactic volume at the low of the day. Seeing a climactic volume at parabolic reversals is really important. Or I wouldn't say that it's really important because it works even without it, but having it increases your chance of winning or catching those reversals or winning in those reversals way, way more. And the previous day close, so it was sitting below it. You see that? How did you do overall, Peter? Oh, I saw your AMD trade. You did well, actually. Thank you for sharing that, Peter. I'll also share with you guys my bad trades. Right now, we don't need to only share our winners, right? We need to see both of them because we all make mistakes. Now, let's see what Dell did. Apple. Oh, Apple is good. I was long buys on this one since the beginning. I like this right here on the daily chart. Sort of a range up here. And we gapped up. I don't see a lot of levels in front of us. I think I would have drawn some levels out of there, but not many levels. The 16 chart. Do we have the 60 then? I think that's the 16. That's the 15. Okay, we don't have the 60, we have the 15, but still on the 15 you could see the range. There is a range. Where am I interested in trading this thing? I'm interested in trading this thing only to the long side. Why wouldn't I trade it to the short side? I wouldn't trade it to the short side because if it breaks down right here, it will be right into the face of the previous resistance, and then there will be another level right below it. So I'm not really interested in trading this thing to the short side, only to the long side. And that's amazing. I wouldn't have caught this one. Definitely knowing myself, I wouldn't have taken this trade, but there is a reason for it. The gap up literally around the levels from the pre-market, and look at this, it touched it in the pre-market, it was there yesterday after market hours, and it held it today after the drop for around 8 minutes. You caught it at the bottom. I like the ad is amazing. After it went into the middle of the range right here, taking it to the long side after the break of this small range which formed right there, and you rode it even higher. Did you hold it for a bigger move? But that was it. I think it reached 133.40 today. That was it, because I wasn't listening. Thank you, Peter. Okay, that's